Welcome, everybody, to another episode of the Good Deeds No Investing podcast. I am your host, Chris Seveney, along with my co-host, Jamie Bateman. And today we got a special guest. We have Wealth of Wall Street with us today. And Jamie, I'll let you introduce him and take it from here.
Sure. So Wealth Without Wall Street, just to make sure everyone heard that. I think that...
Did I say Wealth with Wall Street?
Yeah, they don't like to cuss on the show. They say on their show. So Wealth Without Wall Street, Joey Mure and Russ Morgan. How you guys doing?
We're good, man. Thanks for having us.
Man, I'm awesome, Jamie. Good to see you, Chris. And thanks for having us on your show.
No problem. Thanks for coming along today.
Yeah, so why don't you guys start off by kind of just telling us a little about your background and what you guys are up to.
Yeah, well, so I always like to tell the really bad story before Joey's really awesome story. So, Chris, I got in the financial business in 2004. I helped put people part with their money, and as a financial advisor, that was what I was good at. And I became really an expert at it in 2006 as the market was rising. Realized I was a financial moron in 2008. I didn't know anything. You mentioned off the air that there was a little known stock that you invested in, didn't work out so well. I had a couple of those myself. I won't mention all of them so you guys won't laugh at me, but one of those was General Motors before it became Government Motors. So I learned very quickly that my stock picking days were limited, and I went seeking financial advice and mentorship from people who are being successful outside of Wall Street. And I came across a couple different ideas. And from that, it led me to meeting Joey at church one time and me sharing this concept with him, becoming his financial hero. So I'll let you take it from there, Joey.
Way to set yourself up there, bro. The whole hero thing may be a little bit of an embellishment, but I will say this. He actually started off the conversation with like, hey, man, I want to start sending you mortgage clients. Well, I was in the mortgage business, and I was like, that makes sense. Yeah, absolutely. I'm in. He's like, but first you have to read this book. So he hands me the book, and he says, that's going to be $20. I'm like, you just asked me to read the book. Like, I'm doing you a favor, aren't I? And he's like, yeah, but you got to pay for it. So I was a little bit put off, but I went ahead and went down the path. And little did I know, that was actually the turning point for me, because what I had been seeking up to that point financially, there really wasn't a category for it. I couldn't figure it out. Even though I was at Wells Fargo and I was surrounded by all of the different financial instruments and vehicles that were around, none of them really kind of made sense to me, because I was in commercial or in a commission only sales. So my income, although it was over $300,000 a year, I always felt this need to kind of have access to my money. So ideas like 401ks, IRAs, things like that always made me nervous, because I was putting money away for a long period of time without access, and penalties were looming, all this sort of thing. So he had me read the book, Becoming Your Own Banker by R. Nelson Nash. And I was like, yes, this is exactly what I need. I need to have access to my money, but I want it to grow, and I want to be able to use it to create passive income. And so anyways, after 4 years of doing this as a client, I got so compelled one time. We were at a conference. I came home and I told my wife, she's pregnant with our fourth daughter at the time. I said, hey, babe. And I was kind of like, holding back a little bit because I was a little bit worried about her response. I said, I really feel like I need to change careers. I need to go and do this full time with Russ. And I was just imagining what was going to happen at that point. And her immediate response was, Joey, I think you should do it. So again, she's given up over $300,000 of income. She's at home with our 4 kids at the time, and we're about to have a 5th baby. And I'm like, wow, that was pretty amazing. That was exactly the step that I needed to take in order to walk away from that career. And so that was in 2014. And since then, Russ and I have built Wealth Without Wall Street to help people on that same financial journey to creating passive income, which will give them their time back. As I had, over the years, more and more of my time got taken, the more my income rose, the more freedom I gave up. My phone was always at my hip. Even when I was on vacation, I wasn't present. and I needed a change. And so anyways, we want to give people that freedom back.
So you went to your wife who was pregnant on your 5th child and told her you want to change careers. Did you get your head examined before you went and did that? I'm just curious. I mean,
I told you he wasn't very smart, right? You know, if I'm his financial hero, that tells you a whole lot. I already set the bar really low early on about me being a financial moron, and there I am trying to talk him off the ledge actually on this.
Yeah, he did say, "Wait a minute, you want to do what?" Because I told him before I told my wife.
Yeah, I was thinking, this is a bad idea, dude. There's no way. Like, are you sure? Like, do you realize you're going to walk away from – and Joey's very humble in this. I kind of boast on stuff, but he's the humble guy of the two of us. And, I mean, he was leading a mortgage team of about 35 officers, doing 20 to 30 mortgages or so a month himself. He had become the go-to person in a mortgage in Birmingham. And he was willing to give that away. And the only thing I can figure, Chris, is that he looked at how bad I was doing what I was doing. And it's like, I can improve upon this. Not to mention, there's lots of people that need this. And if I come along, like, this has got to get better.
If Russ can do it, anybody can do it, right?
Exactly.
So what did that look like after that transition? What were you going toward?
Well, I can tell you one, within the first 2 weeks of shifting careers, I figured out that there was like a massive weight on my back that was that commission only hamster wheel, right? That was constantly going. Like, I can never rest because the next month I had to produce. The next month I had to produce. If I took my foot off the pedal, so to speak, bang, I mean, income drops and it all falls apart.
Well, one thing I would ask, and I think it'd be helpful, because you mentioned the Becoming Your Own Banker book, and I was smart to charge you for it, because if I wouldn't have charged him, the likelihood of him reading it was probably pretty slim. But if you know Joey as good as Jamie and I do, Chris, you'll know that guy is cheap. He will make a dollar turn the corner. And so if you make him spend $20, I knew good and well he's going to read it. And he's a smart enough guy. He was a valedictorian in his high school class. He's smart. He understands how things work. You just got to get him involved. But one of the things that, Joey, I think would be interesting is to talk about, how could you do that? How could you leave a job making $300,000? What gave you the permission? Because you mentioned how, like, you had this pressure on you, but how did that pressure not enhance when you went from 300,000 to zero? Because, by the way, I wasn't paying him anything.
Yeah, exactly. He was cheaper than I was. But yeah, what the game changer for me was, this Become Your Own Banker idea is utilizing high cash value life insurance policies to store cash so that you have dry powder to take advantage of opportunities. Well, for 4 years, I had been putting over $60,000 a year into these policies and just shoving that away. I used it some to pay off some debt, some to do like some renovations on the house and so on and so forth. But I had a large amount of cash in these policies that gave me that peace of mind that said, man, if I run into a bad quarter or a bad 6 months in this business, I can take the time that's needed to invest in this to get up and running and get off the ground. And I'll tell you this, if I had not done this, if I had not spent those 4 years capitalizing, as Nelson Nash talks about in his book, and I just had my 401k, I probably never would have taken the step. I probably never would have even thought it was an option, because I would have had no access to capital. So I don't know if that helps, but just to give you some background, that's what really gave me confidence.
Yeah. So the overall concept that you guys are talking about is the infinite banking concept, right?
That's right.
Yeah.
Can you explain that a little bit further?
Yeah. So I always like to put this in context, right? Because sometimes people hear the word infinite banking, they go out, they type it in Google, and, you know, just like anything on the internet, it's absolutely 100% true, whatever you read. And
absolutely.
So, I mean, it's very similar to if you just went out and said, hey, I want to buy, mortgages from people who aren't paying for them, making their payments. That's a really good idea.
Right.
But in context, so Joey and I look at the world from kind of this like step-by-step process. I went to Auburn. I was not the valedictorian in my high school class. And so I have to break things down very simply. So one of the things we always tell people is that we have to have clarity in what we want. And really early on, like, so for Joey, he wanted more time with his kids. For me, I wanted more time to create new ideas. They call me the idea guy on our show because I'm always trying to implement. I've got more LLCs than most people have: shirts, shoes, other things in their closet. Like, that's just like, I love businesses. I love business ownership, how to make businesses run, get involved and let somebody else run it for me.
Joey.
And so exactly. So like for me, like clarity, understanding what I'm after is if I can get really clear of what I need to do and why why that's important to me. And that's what we do when we meet with people, is to try to figure out what's their want. And most of the time that comes into, okay, I got to get control of my money. You guys know about the financial golden rule, right? Those who have the gold make the rules.
Exactly.
And so for us, infinite banking fits square into step 2 for us, which is control. You got to have more money coming to you than going away from you. Most people, they understand that's the financial diet, right? Everybody knows diet and exercise. Spend less than you make. But why is it that, 99% of Americans aren't doing that? Because they don't have a plan, have a process. The things that are important or urgent today take precedent over the things that they want. And the financial tools that are out there tells you to wait 30 years, delay gratification to receive it. And I realized that didn't resonate with me. I'm a, instant gratification person as well. I wanted the things that I wanted. Well, when I got really clear as to what did I want? Well, I wanted to have access to capital so I could start new businesses and create cash flows. Then by getting really clear of how I use my money efficiently. And that's why he and I got connected with the mortgage, because I wanted to figure out ways to make my mortgage payment as low as possible. Most people do the opposite. They get 10-year mortgages, 15-year mortgages, and so forth, and make their payments as high as possible. I wanted mine as low as possible so I could get more cash flow going toward assets and producing income. And so that's where infinite banking falls in, is that my cash has to have a place to reside. It's going to flow through my hands. How much am I going to be able to earn from it? So the way this infinite banking concept works is I store cash into life insurance policies. And when I use that term, I don't mean like the one your local State Farm agent or Northwestern agent has showed you or sold you in the past. I'm talking about ones that, like Wells Fargo, the bank that Joey used to work at, has. Most people don't realize that banks are the largest purchasers of cash value life insurance. Wells Fargo, for instance, has a little over $18 billion, that's with a B, in cash value life insurance, and all the banks do this. And so I was like, okay, I got to get my money there so that I can control it. Because if I control it, then I can make the decisions with it from that point. So infinite banking is just the process of actually using those dollars in those cash value policies to go do things with it. And our thing is step 3, which is actually creating a path or creating a course. And that is, that's doing lending like you guys do with note investing. It is buying real estate and doing the traditional, or doing the short-term route, or doing the land flipping route, or it is investing in businesses, whether passively or actively.
So how do you get, my question, because I know enough to get myself in trouble on this, and I've looked into it in the past. And I understand the concept of, you get that life insurance, but how do you get, your money back? Can you kind of explain that process and how it works a little more?
When you say get your money back, what do you mean by that?
So I understand the way, and again, I'll explain how I understand it, and then you can tell me I'm all wrong, because I did Google, and Google's always true. And Wikipedia is another one that's always great for information. So it's my understanding that you take, you get a cash value life insurance policy where you dump, so much cash, call it, 50 grand a year into this thing for like 5 years. And then it's got a, call it a death policy on it. But you can also, it's my understanding, like take loans or something from that policy, but it still kind of accrues interest or something along those lines. And that's kind of where it lost me a little bit. And I like to think I'm a smart guy. I mean, I was homeschooled, the only kid, still not a valedictorian, but that's okay.
What are you talking about? You're the only kid. You're number one in your class.
Exactly. But so But so yeah, could you explain kind of how the process actually works? Because I also hear things, it's only for people with a lot of money, and or I hear sometimes people say you're paying too much in fees to people and it's really not worth it. Those are, and again, these are some of the things that, I feel like almost, I'm a politician on one side and, people are just throwing stuff at you and stuff. And then you got the other side throwing it back. So kind of like to hear it from people who actually are in it.
Yeah. No, that's great. Thank you for clarifying, because I could have totally gone down the way wrong path on that answer. So I would compare this to something that you already know really well, right? Mm-hmm. So in your note business, you're going to take capital from some place and you're going to invest in a note, right?
Yep.
And now I'm going to sound like the moron trying to explain note investing. So just we'll just trade hats here for a moment. But let's just say that it's $50,000 for a note. That may be really low, maybe really high. I don't know. But if I have $50,000, that money has to come from somewhere, right? Yeah. It could be from a checking account or savings account where you just had a totally liquid money. And now you've put that money to work in a note, and it's going to create cash flows back to you, right?
Yep.
In the way of some sort of a monthly payment. So that money has to flow somewhere. Where's that money going to go? Probably right back where it came from, correct?
Yep.
So I'm just going to compare it to a checking or savings account. If I have built up any amount of money in there, and then I put it to work by purchasing that note, now I'm going to replenish it with the money that's coming on it monthly. And then one day, if that money gets paid back in full, I'm going to just put all the rest of it back into the bank account. In a policy, just to kind of follow the whole process, I'm putting in premium dollars, which are deposits. Think about those as deposits into your bank account. And I'm going to that's going to get credited as cash value that I can then borrow against. Okay. Think about that as equity in a home. If I go to a bank and I say, hey, I need a line of credit against my home, they're going to literally lend me their money and my house's equity is collateral. True?
Yep. Correct.
Okay.
Mm-hmm.
Same thing is true with your policy. As you build cash value, you can go to the insurance company and say, hey, I need to borrow some money to go invest. You don't even have to tell them what it's for, by the way, but in your mind, I'm going to go invest in this note. Mm-hmm. They say, where do I send the money? And by the way, we're going to use your cash value as collateral. So they lend you the money, you go purchase the note, and now the cash value, or excuse me, the cash that's coming from that note has to go somewhere. All we're going to do is we're going to put that back into your policy as a loan repayment. So you're paying back the insurance company's money with the cash flows from that note investment, right? Mm-hmm. The reason why this is so huge and the difference maker is compare that to your bank account. If I took $50,000 from my bank account, what happened to the $50,000? It had to be removed from the instrument or the vehicle that was giving it credit or interest, which, I mean, I know it's laughable right now, like a bank account is 0.01% or whatever crediting. So it doesn't feel like you're losing anything. Mm-hmm. But in a policy, I'm able to consistently earn 3 to 5% over the entire lifetime. And as I'm borrowing against it, my capital's still at work at that 3 to 5%. Now that is how, this is not a get rich quick scheme, by the way. This is keeping capital liquid, using it for the investments I was going to do anyway, and then returning that capital back to home base, so to speak, as loan repayments in this case, and continuing to expand over time. So does that help answer what you're asking?
Yeah, it does. And if I can kind of, another way I was thinking about going through this is, it sounds like it's almost similar to like if I had a 401k, I can take out a loan against it. I have to pay back at interest. But in this instance, it's a life insurance policy that I've put the cash in, that I'm pulling it back out and then replenishing it, and it's collateralized by that policy. That kind of right?
Exactly. It always goes back to compared to what, right? What are we trying to do with the money? Mm-hmm. And so Joey, one of the things that he lacked to share in his story, and I'll share it for him just because I thought it was so cool at the time, is he needed to replace income. And of course he could spend some of the dollars in his cash values if he needed to, but he wanted to be smart with his money. So one of the first things he did when he transitioned out of the mortgage business is he got into the note business. Now, what he did is did a couple of private notes to people who were buying homes. And so he actually became, in essence, the mortgage company on a couple of notes. So he took a loan against his policies and turned that into cash flow, which you guys are really super familiar with, right? I mean, yep. He created a performing note that was paying about 10%, which was really well backed by, I think it was 70% capital or loan to value from the property he was lending against. So he created a monthly income stream. Well, the monthly income stream that he didn't spend that month because he was able to make a few clients with my help, then he was able to take that extra cash flow and replenish or reduce the lien against the cash that he had in his insurance policy. Now, here's how that compares, because you mentioned 401ks. Obviously, we all know at 401ks, there's limits to how much money we can borrow against. Joey knows this very well because he actually took loans against his 401k to start insurance policies.
I've done that. Yeah.
There's limits to what you can do. Now, they're in an insurance policy. The only limit is to how much money you have in there. It's no different than your checking account. They say, well, how much money can you take out of your checking account? Well, what's your balance, right? That's the same exact way these life insurance policies work. And that's why the design of them are really important, because the typical financial advisor out there, and we just got off a phone call with a client, had been referred to us, and they do very well. And they were looking at setting some stuff up, and they said, oh, this whole infinite banking thing, we think we've heard something like that. Our existing advisor has been telling us to do that. So you think that's a good thing? I say, I think it's a great thing. I put, well over $250,000 a year in these policies every year. I feel like it's good. This is what I do with my money. And so they were like, oh, cool. And they were like, well, so you think we should do it? And I said, well, I think you should show me what they're proposing. So that way, if you're going to do it with them, that's fine. But I want to make sure it's set up right. Well, unfortunately, and this is where the financial market kind of falls apart. And this is where a lot of the horror stories that we find online that says, oh, this doesn't work, is mostly because the design and the setup and the follow through just isn't there. So they were looking at putting $80,000 a year into two insurance policies, one on each one of them, the husband and the wife. And between the two, it had a total of $9,000 of cash value available in year one. Now, I'm sitting there, I'm talking to them. What their goal is to protect their lifestyle if their business went away. Mm-hmm. And I was like, in order to do that, just like Joey, we're going to have to go buy assets that are going to produce income. How much cash flow do you think we can create with $9,000?
Not a lot.
Not a lot. In year two, after putting another $80,000 in, they had a whopping access to about $19,000 of cash value. So they put $160K in, they got like 20 grand. And I was like, does that look like that would work? And by the way, they love their financial advisor, is a friend of theirs. And I'm not saying he was doing anything bad, but this is the typical financial advice that's given out there. And I said, see, that's a problem. What I would say is we've got to design these policies to where we have the highest level of cash value available. And now there's limits, and that comes where our training and our coaching works in. And I said, let me just show you as an example, as an aside, the same example where you put $80,000 a year into these policies, we'd have access to roughly about $50,000 of that cash. Now, that's 5 times more than you're going to have here. Mm-hmm. Now, here's the thing is that Joey and I don't make as much money doing that. And, that goat flies in the face of everybody says the reason why you sell life insurance is so you make these huge commissions. Well, actually, we do our best to cut our commissions as much as we can, because our goal isn't the life insurance. And your goal shouldn't be the life insurance. Your goal should be, how do I create passive income, but how do I make sure my cash is not rotting my whole life sitting in a checking account from a bank who's making a good living off of me?
If I could, sorry, Russ, just jump in real quick. Just full disclosure, I am a client of Wealth Without Wall Street, and I've been on their podcast. And so just speaking from my experience, it did take me a couple months. I'd researched infinite banking years ago a little bit and kind of dismissed it. And then did take me, once I kind of discovered you guys, I started researching it further, and it did take me a little while to wrap my head around it. But one of the things that really kind of sold me on it was that compared to a 401k loan, I've never taken a loan against a 401k, but I don't think that amount of cash that you borrow against is still growing. Whereas in the policy, it actually is still growing the entire time. So although it's not the exact same dollar, the policy is the cash value is the collateral that you're borrowing against. But that policy is continuing to grow and grow and grow, no matter what I'm doing over here on the other side with the loan and the money that I'm using. And then if I could just one, as far as back to note investing and how this could play into a note investor's world. Note investing, similar to real estate investing and other businesses, it really, and Chris knows this very well, it boils down to essentially three parts to your business. One is raising capital, one is sourcing deals, finding notes, and the last one is managing your assets. So, asset management. Well, I see IBC and, I see this as just another source of raising capital. So although it does require your own funds going into the policies for sure, it's not just money coming out of thin air. To me, that's where it fits into my business. It's another way of accessing capital to fund the note business. So other ways that can be done is selling partials, doing joint ventures, other people's money. But the IBC for me plays into that one of those, that's the one stool, leg of the stool, if you will, for my business. And one other point I wanted to make quickly is that IBC really is, you guys kind of touched on this, but infinite banking is bigger than just the policy. The policy is what you're using for infinite banking. Just so happens that this well-designed policy happens to be the best tool that you've found for infinite banking, but they're not equivalent. They're not the same thing. It's just part of infinite banking. And it does take some time to wrap your head around it. And I'm not trying to sell it to anybody. I'm not suggesting it's necessarily for everyone, but for me, it's been really good so far. So
one question.
By the way, I know there's going to be a lot. I mean, we really don't have time to go into all the details on a show like this, but if people have interest in this and they want to get more information, Chris, is it okay if I allow people, we have a course specifically in our community. You can join today at wealthwithoutwallstreet.com/good deeds. And if you go there, you can actually get access to our Infinite Banking 101 course. It's, 10 or 11 videos, something like that. And you can do it at your own pace and you can just gain information, because when you can see numbers and you can hear what's going on and then compare it to what you're doing, then and only then should you see, does this help me get closer to my financial freedom or farther away? And just as you said, Jamie, it's not for everybody, but if it is for you, we want you to be informed and then want you to work with, somebody that can properly structure these for you so that you get started off on the right foot.
Yeah. One of the questions I have is, what's typically the minimum investment per year someone should have to invest in one of these things?
Yeah, I appreciate the question. We get that a lot, Chris. And if it's okay, I'm going to pull a Amy Coney Barrett on you right now with the, that's a hard question to answer and would not be appropriate for me to give previews or forecast toward what that looks like. But I would say this, here's the thing, is that everybody's scenario is totally different. And the way we start this process off with people is we take them through a very simple formula, and we try to find out where their cash is going, how much is going out the door. And our coaches are actually trained in ways to look at their cash flows and find dollars that they're giving away unknowingly or unnecessarily. Now, I don't mean like Joey's, Starbucks fetish that he has. I'm talking about like tax dollars that are going out the door that they didn't understand that could come back. The way they pay for their mortgages, we meant that. The way that they are putting in money potentially in qualified plans, the way they're paying off debts. We have all these courses, and our coaches are trained to help people walk through to get better organized in their cash flows. And what comes out of that is that they're making a lot more money than they're spending. And we say that's a good starting point. And so it's different for everyone, right? The person that comes to us that's making $3,000 a month and is spending, $2,000 a month, that's $1,000 that they're starting with The couple that we were just talking with before we got on the call with you, that's making, $85,000 a month, and they're spending 25. Obviously, that difference is much bigger. But for us,
Why are
it's
you
starting
talking
with
to us right now then?
Well, I mean, here's the thing: is that what I love is that helping people accomplish their goals. This is not about how big the policies are. When I first was in the business, that was what it was, right? I needed every sale, just like every brand new business owner did. Joey and I do this now because we love it and we want to see people reach their destination. I mean, when we get off this call a little bit later this week, I'm heading to Orlando for a week. He's heading to the beach for a week. And we do, like, we're going to go enjoy the life that we've been creating. And it's because we're living this. I mean, it's not just the life insurance policies. We've created passive income streams. But again, Chris, your question is a very valid one. How much can someone start with? And it's dependent on their situation. But when you go about this, and this is what I dislike about Wall Street. I dislike a lot of things about Wall Street. But one of the mindsets that exists in that world is, I believe, a scarcity point of view. And this is what I mean about it. When you watch the savings rates, as I have since I've got in the industry almost 20 years ago, you notice that during the time frames where we've had abundance in the markets going straight up, what happens to the savings rates? They go straight down. Exactly. You see the lowest savings rates when we're at the highest points in our economy. And what that means is that they say, I was earning 10% of my money and I was putting in $10,000 a year, $10,000 a month. And all of a sudden the market went up and it's earning 20%. I can put in half as much and get the same objective. And that's what I'm going to do. And obviously when the markets are bad, they're thinking, crap, I'm not earning as much. So I better put twice as much in there in order to get there. And it always starts with that minimum mindset. It's the way I was going through high school. The reason why I was in the valedictorian, I was trying to put in the minimum effort and still get a C. Whatever C looked like, that was my effort. What do I need to make on that last test and get a C? That's what I'm going to do. Well, but that's not the approach. And what we find is that when people come to us, they actually realize that this is much more than just the little amount that they're savings, because they're spending dollars in taxes. They got mortgages. They're buying properties. They're renovating properties. They're doing all these things. They got all these dollars, and those dollars are flowing through our accounts. And we say, hey, what if we could capture some of that flow in addition to your excess and help you start benefiting from it? And it's what led Joey to, just within the first year, to starting 3 different life insurance policies, because he started seeing it a little bit bigger. It's what led me over the last 10 to 12 years to having now 21 and about to have 24 as we're buying a policy on 3 new business partners that we're getting involved with. It is like, how can I do more? I want to put as much money in these things and not as little. I know that's foreign because that's not the way we're taught in life. We're all Walmart shoppers. But this is a different approach. So I don't know I know I didn't answer your question exactly, but I wanted to give you context so that way when people do interact with our brand, they see it from that perspective, because I see everything abundantly.
Well, I think he answered in a standpoint of there's really no minimum. It really is based off of every person's situation. There's not a minimum, to get into the good old boys club, I'll use that term. It's not like, okay, if you don't have $100,000, we're not even going to talk to you type thing. Because I know there's people out there that just bring up that stuff too, because the ever knowing all Google sometimes says if you're not real wealthy, this isn't something you should even consider. So that's why I kind of wanted to throw it out there. But it sounds like it's really can be catered to anyone's situation. It's just a matter of, it's not a one size fits all. Jamie, who makes 5 times more than I do, is going to be a different perspective than for how I play.
No, you're totally true. I mean, we have people that literally just got their first job, learned about this from one of their parents, and they start a policy putting in $250 a month, and they're 22 years old. So and you name it. I mean, we've got clients in the 7 figures, and it's crazy, but it is definitely independent. It's individual to that situation. And our goal is to help them apply it the same way, regardless of where they are.
Is there minimum age?
Do what now?
What's the minimum age? I think 7 days.
No, for like, could my kids have one of these policies? I guess was like,
yeah, it's 7 days you can have one.
Oh wow.
But our clients typically, when they have a new baby, they usually fill out an application for their new kid not too long after they get home, and the baby needs to be 7 days old. So that's how young you can have.
The policy's on the baby, but the owner needs to be an adult, obviously.
Yeah, the owner has to be an
owner
adult.
Of the policy.
Yeah. We wouldn't give. I'm not willing to give them anything sharp, much less a life insurance policy.
So what are you guys focused on now today? I listened to a lot of your podcast episodes as far as your brand and your business, and besides your own personal, policies and that kind of thing, what is Wealth Without Wall Street? What are you focused on beyond helping, other clients? What are you investing in? What are you up to?
So two things, then I'll jump into what were our own passive income report, if you will. One, we have found that people historically over the years have started policies and they've not done anything with them, right? There's been inaction, even though they came to us and had these big goals and aspirations that they wanted more time freedom. They wanted to go pick up their kids after school or drop them off in the morning and not have to worry about asking for time off. They've not taken action. And so we are building currently and starting to enroll people into a coaching program where people will literally in group settings like 10 or less be working with a coach over a 6-month period of time to implement all the things that you can do on your own. But be honest with you, when we're left to ourselves, a lot of times we don't take the action necessary. So we wanted to build that coaching program that people can invest in themselves by doing. And then secondly, we have a larger, like an elite mastermind for passive income that we are also going to be launching in 2021 that will be for those who are looking for access to deals and opportunities that are more done for you passive income ideas. They're looking for networking opportunities with some of the best of the best, the top dogs, if you will, and those that then can use a personal CFO that will help them implement, essentially hold their hand at each step of the rung. So when they leave a mastermind, it's an in-person 2-day event. They're going to have a list of things they want to do. And we want them to have literally a personal CFO to help them make sure that those happen, whether it be high value strategies and taxes, whether it be setting up certain passive income ideas, or any of those type of things. We're building that elite mastermind that people can be a part of. So those are two things that I think we're excited about as a company. And then maybe Russ, you want to share more what we're doing on the passive income side personally?
Yeah, well, I'm sure this pales in comparison to you two guys. So please don't laugh at us. But one of the things that Joey and I, like most business owners, we get so focused and so excited about what we're doing that we spend all our time, all our waking hours, even on vacation, thinking of ways that we can grow our businesses. And sometimes our personal finances takes a back seat. And even though we've been great at saving money, putting money in life insurance policies, what we realized is that we weren't getting closer to financial freedom because accumulation is not freedom. It's cash flow. It's money that comes in regardless if you go to work or not. And so we made a big focus, 12, 18 months ago to start focusing on creating passive income streams for ourselves. And so several months back, we said, we need to start sharing this with our audience so that they can see our journey and hopefully inspire them, because they're like, if you guys can do this, surely I can do it. Right. and so we started putting out a passive income report that just shared some of the strategies that we were currently implementing. And I'll highlight just a couple good ones and bad ones. So a couple of good ones we've had is we got involved in land flipping, which is just short raw land, inefficient market where we buy properties at 20 to 25 cents on the dollar, and we turn around and sell them on terms. Very similar to the wholesale market and the creative finance market people do with houses. We're doing with raw land. We've seen that business kind of explode. We partnered with the group that's doing that. We've got about almost $6,000 a month now in cash flow that's coming from those notes, and constantly, obviously, just using those note dollars to buy new properties. And our goal is to constantly grow that. Another thing that we did We interviewed a bunch of people in the short-term rental space where people are putting properties on Airbnb, VRBO, Booking.com, things like that, and realized that that's an inefficient market. The world is changing. People don't want to stay in hotels anymore because they become germaphobes like my wife, or they have 6 or 7 kids like Joey, and they're looking for a bigger place to spread out. And so we started looking at that and realized that, hey, there's a way to take arbitrage and use it in our favor, rent places, put 12, 18-month leases on apartments and condos, and then turn around and rent those to short-term travelers, people who need to come in town for, business travel, for medical travel, or sometimes for pleasure. Not a whole lot. We live in Birmingham, but there's we've seen a lot of it, success in that in a very short period of time, and we're over a little bit of $4,000 a month of net cash flow after paying everything right now. We're adding 7 more units as we speak. They'll be on online by the end of the month. And those are 2 of the things I would say that we're having success in. But I always like to point out that we have failures too. And you guys mentioned syndications earlier. I've got a syndication I invested in, multifamily, that didn't work out the way everybody said it was going to do. They didn't pay the guaranteed payment every single month and come in regardless. Now they're accruing it. Now, whether or not we'll ever see those accruals, we'll see. But, COVID hit that complex. They had 13 different complexes, hit them pretty hard. I think they made some bad decisions accounting wise, and we're seeing implications of that. We started a business that is in the cattle world, and we thought we were going to be the next one selling sperm for the next bull, or Joey, I think, watched the movie Secretariat and got excited that there was an opportunity to make money on that kind of stuff, and we got into that world, think we were going to play that game, but realized that we were the dumb ones. That was one of those joint ventures. You guys ever heard the details of a joint venture? There's somebody with money and somebody with the experience, and by the end of the deal, they switch spaces. Well, yeah. Well, we were the ones with the money, and those guys got it now. So those are just a couple of things that we share in our passive income report, and we put out our numbers, show our expenses, and show obviously how much further we have to get to our goals. But that's been a lot of fun doing that too.
So you're not really up to anything at all? Sounds like
just going on vacation, of course not.
Right. True.
I'm curious, how many people, like clients, how many you have in your group? Like, how many clients do you have overall?
Okay. Well, so in our community as a whole, we're a little over about 3,100, and clients, we're probably north of 500.
Okay. So
yeah,
pretty big size from that perspective.
Yeah, and what we've done, obviously, Joey and I are at a point now, and thankfully for everyone listening, you don't work with us because our talent is not follow up and follow through, and so one of the things that we did over the last 12 to 18 months is we've had a lot of clients and people in the industry reach out to us and have come aboard and become coaches, and so we have a fairly large team now that is able to help people implement all of the things. And they just let Joey and I get on podcasts like this and share vision.
Jamie, don't smile too hard about the lack of follow through and follow up there. Okay?
Let's just say I'm working with Ernie now. Okay.
Exactly. Good.
Just curious, do they have to have any special licensing? Cause there's insurance involved, and I don't know if you're selling the insurance or if it's through, I'm just curious, if there's licensing and stuff like that you have to go through.
Yeah, they all of our coaches do a couple of things. One, they get insurance license because that is definitely a big step in our process. That's what we're known for, is helping set up the infinite banking process. We don't give financial advice. We don't give investment advice. So we avoid all the securities laws because that's not what we're wanting to do in any shape or form. But also one of the things our coaches do is we want them to be certified in the infinite banking process. So Nelson Nash, the author of Becoming Your Own Banker, created an institute to ensure his legacy was not going to be watered down by people who just wanted to sell insurance and do it the wrong way. And so we send all of our coaches through that program. And it's a pretty stout program because it's not led by a bunch of insurance agents. It's actually led by one of the most written Austrian economists, Bob Murphy, another pretty stout guy that's been in the financial space, Carlos Lara, and Nelson Nash's son-in-law. And so they go through this program. They learn a lot about Austrian economics. They learn a lot about the way insurance companies work, but then they understand how these policies should be designed. And so we send them through those as well.
Getting close to wrapping up time for this
Chris,
episode.
if you, I have an idea. I have a few questions we could do real quick, rapid fire.
Sure, go ahead.
Finish it off if you're good with that.
Absolutely.
I just like to see them squirm a little bit, but no. So most of these questions, you guys, I'll just shoot them off real quick, and whoever wants to jump in, real, succinct answers, and then we'll wrap it up. Most of these questions revolve around infinite banking specifically. So first question with infinite banking, why isn't everyone doing this?
Number one, I don't think it's widely known. And number two, typically people that have life insurance licenses are not taught this. This is totally countercultural, if you will, from if they've been trained by an insurance company. They typically do not teach this. And there's several different reasons for that, but I just think there's a reason why Russ and I send people through the practitioners program with Nelson Nash, is because we want them to have the right education. And to be honest, it's just not widely known.
Got it. Okay. Next question. What is the one thing you wish you had done differently in your own personal IBC journey?
This probably will sound self-fulfilling, but I wish I would have started bigger policies earlier, and just not being able to envision what we were going to do and the amount of cash flows that were going to come. And this is the old Chinese proverb, when was the best time to plant a tree? It was 20 years ago. And these insurance policies, the oldest ones that you have, are the most productive. My oldest policy I bought in January 2010. And the premium I paid last year and the growth on it was twice what I put in it. And when you compare that to any checking account, that makes me go, man, I wish that number had a couple more zeros behind it.
Got it. Okay. Next question. Who is this not for?
This is not for someone who spends what they make or more than what they make. There is an element of self-discipline that is necessary. If you can't get that under control, and that's why Nelson talks about in his book a lot of the human elements, then if you can't get that side right, really this doesn't work for you, nor does any other financial program or vehicle work for you either. So
makes sense.
All right. My ex-wife is excluded.
This is a little bit tangential, but what is wrong with a self-directed Roth IRA in your view? I know it's not financial advice.
Yeah. So here's where, again, everybody's different, right? I'm going to tell you why it's wrong for me. And I don't want to say it's wrong for you. For me, I want freedom. Freedom happens today. It doesn't happen at 59 and a half. And so any type of IRA qualified plan means I'm postponing the use and access of that money if I wanted to spend it, right? I know I can use a self-directed IRA to do investment deals, but I can't actually consume any of that money without all the penalties and stuff involved. So for me, it's postponing freedom, and you just can't make enough money. You can't force me to postpone my freedom for 20 years.
Got it. All right. Last question. How do the insurance companies view infinite banking? I mean, I'm sure you guys, help create more policies for them. Obviously, that's good, but you're not necessarily using the policy maybe in the way, it was intended. I don't know. Maybe I'm wrong about that, but how do they view IBC?
I would say a couple different things. One, there are certain companies that are anti-infinite banking, and that's why you want to work with somebody who's a practitioner that understands which companies are good for you and which companies are not. I think from a liability standpoint, there's some of the bigger players out there, especially like stock companies and things like that, which you don't want to work with anyway, that they would shy away from it because they don't know what that agent out on the street is telling people. and they think that there's a more chance that, they could be telling them something wrong around this concept and get them in, some sort of a lawsuit or something like that. But in general, we're not doing anything. Like here's the peace of mind. If we were doing something that was kind of like this loophole that the insurance company wasn't aware of that was happening, you should run for the hills, right? This is a bad idea, because eventually you don't want to have all your stock in, the possibility that something could go wrong down the road. This is something that actually insurance companies have 100% allowed to happen. It's part of a contractual relationship with their policy holders. And in honestly, in times like today, it's actually a benefit, because when they can get a 5% loan rate from a 100% collateralized place, like an insurance policy, someone's life that they have, they're actually reducing their risk and potentially even enhancing their portfolio by having that 5% known rate coming back to them. So, all intents and purposes, it's a really good thing for them. And it just has to be, treated correctly.
I have one question too that I'm not sure you may have mentioned, but it went over my head like a lot of things. Tax implications.
Tax implications. Yeah, that's great. So this is a part that's sometimes sold as a benefit of why to use these life insurance policies, is that if they're done correctly, not only can the growth be tax deferred, but actually you can access the money later on, and whether that's 6 months, 6 days, or 60 years without paying tax on it. Life insurance has been afforded one of those, law rules under the tax code, under the code 7702, that if you avoid this, what's called a guideline premium test, you don't have to pay tax on the access to the money. But the tax implications are, if I don't set it up correctly, or if I put all this money in, take way more out than what I put in, and then I cancel the policy at some later date, you could have to go pay back taxes as if you had sold another type of investment. So that's why I think it's important to understand like how these policies are designed, and working with a group who knows how to make sure that none of that ever happens.
Thanks for that. Jamie, any other questions?
No, sir. I'm good to go.
So thank you guys for joining us. And if you want one more time, let people know how they can reach out to you, how they can learn more about the infinite banking. Why don't you relay that information again to everyone?
Yeah. Well, thank you again, Chris and Jamie, for having us on. What great questions. And Joey and I love just obviously sharing. This is something that we're passionate about. But if you want to learn more about this, go to wealthwithoutwallstreet.com/good deeds. And there's a link right there where you can join over 3,000 people who are on the same journey. Take the Infinite Banking 101 course to understand. You could jump into the Financial Freedom course if you really want to go through that process. And there's other ways that you can get involved, but everything would be in that link.
Oh, thank you, Russ. Thank you, Joey, for joining us on this episode of the Good Deeds Note Investing Podcast. As always, you can follow us on iTunes, Stitcher, Google Play, Amazon, iHeartRadio. I forget the names of all of them, but go listen and leave us a review. So thank you all for joining us, and go out and do some good deeds.